Welcome to this explainer. Today we are peeling back the layers of a company that is, honestly, pulling off a fundamental transformation right before our eyes. We're looking at an organization that's evolving from a simple rocket manufacturer into an absolute infrastructure and communications behemoth. Yep, we're talking about SpaceX. Space technology isn't just science fiction anymore. It is literally a balance sheet. So today we're going to dive strictly into the numbers, the hardware, and the massive future bets driving their valuation story, just to understand what it all truly means. Here is our roadmap for today. We're going to start with a $150 SpaceX question, then move right into the rocket reusability flywheel, check out Starlink's revenue engine, unpack the speculative AI bet, weigh the bull versus bear cases, and end with the ultimate space economy verdict. Let's jump in. Section 1. The $150 SpaceX question, anchoring the valuation. Okay, so the absolute crucial point here is this anchor number, $150. This represents the price level surrounding SpaceX's public market debut. But you might be wondering, why does this matter to us? Well, because at this level, investors aren't just paying for the rockets that are launching today. Not at all. This $150 acts as a massive test of expectations. It represents years of future unproven growth that Wall Street is desperately trying to quantify right now. When you see a number like that attached to a newly trading entity, it's not a reflection of what they did yesterday. It's a heavy, almost burdensome expectation of what they absolutely must flawlessly execute tomorrow. Now, think about the incredible contrast between their physical milestones and the stock performance. Operationally, SpaceX is on track to hit an unbelievable 100 missions in the year 2026. That proves they pulled massively ahead in the space race. I mean, we're talking about a launch cadence that legacy aerospace companies could literally only dream of. Yet the stock has been a bit of a roller coaster. Shares pushed to a peak of roughly $176 before ultimately dipping back down below that $150 debut price. This kind of volatility tells a fascinating story. It really shows us a market grappling with how to properly value hardware triumphs against hard financial realities. Hitting 100 missions is a spectacular feat of engineering, for sure, but financial markets, they are completely unsentimental when it comes to long-term capital returns. And this brings us to our central conflict. The question isn't just about how cool the technology is anymore. It's this. Has the market already priced too much of the future into the stock? Remember, investors aren't valuing a traditional aerospace company here. They're pricing in a future of global telecom and artificial intelligence. We have to figure out what that vast, multi-layered future is actually worth. When you buy into a valuation this high, you're essentially betting that the company will not only succeed in its current markets, but will fundamentally invent and completely dominate entirely new ones. The pressure is just immense. Section 2. The rocket reusability flywheel, changing the economics. So instead of geeking out over rocket thrust or payload specs, let's just look at pure business metrics. 36. A single Falcon 9 booster has successfully completed 36 flights. Think about that for a second. It's kind of like turning a multi-million-dollar single-use firework into a highly reliable, reusable delivery truck. This level of extreme reuse completely shatters the traditional capital economics of going to space. Back in the day, every time you went to orbit, you basically threw the entire vehicle away in the ocean. Imagine buying a 747, flying it from New York to London once, and then just scrapping it. That was the old space economy. Hitting 36 flights on a single booster means they're amortizing that massive initial build cost over dozens of revenue-generating missions. It's a real game changer. And this brilliantly illustrates the flywheel effect. You see, reusable rockets aren't just a fun party trick to save a few bucks on metal. They're the engine driving the whole company. It starts with reusable rockets, which allows for vastly more frequent launches. More launches mean they can efficiently deploy more satellites, which directly builds a larger Starlink network. And that larger network, well, it culminates in exponentially more revenue potential. The faster they launch, the faster this entire money-making flywheel spins. Every successful landing isn't just an engineering win. It is the financial fuel that funds the next expansion, widening the gap between them and literally any potential competitors. Let's move on to Section 3, Starlink, the revenue engine, from rockets to telecom. Okay, the financial proof is really in the revenue split here. Out of approximately $7.8 billion in total reported revenue, a massive 55%, that's $4.29 billion, comes strictly from Starlink. Launching rockets for other people makes up the remaining $3.51 billion. This is a vital takeaway, guys. SpaceX's most important business isn't launching rockets for other companies anymore. It is launching satellites for themselves. They use their dominance in cheap, reusable launch vehicles to bootstrap an entirely different type of business. They've effectively become their own biggest customer, transitioning the core financial driver from a volatile launch manifest to a highly scalable consumer and enterprise service. So, what exactly is that Starlink footprint? Well, it's an extraordinary operational constellation of over 10,900 satellites. Wow. Because of this massive footprint, SpaceX is effectively a telecom giant generating recurring connectivity revenue. Think about your monthly home internet bill. That's recurring cash flow, right? It's a remarkably stable economic engine that traditional aerospace competitors simply do not have. While a legacy rocket maker is constantly hunting for their next massive government contract just to keep the lights on, this infrastructure is quietly collecting subscription fees from millions of users around the globe every single month. It is a completely different business paradigm. Which brings us to Section 4, the speculative AI bet, the deep future layer. Now, let's logically map out this fascinating argument for AI in space. First, artificial intelligence expansion is happening everywhere. We all see it. Second, that expansion requires enormous computing power. Third, all that compute demands massive physical infrastructure. And finally, that infrastructure ultimately requires electricity, networking, and data capacity. Because SpaceX already controls the delivery rockets and a massive satellite network, they are uniquely positioned to build this data infrastructure directly in orbit. It is an incredibly ambitious progression. I mean, imagine moving the massive, energy-hungry server farms we currently have on Earth into orbit, utilizing pure solar energy and space-based laser networking. It sounds exactly like science fiction, right? But structurally, they are putting the exact pieces in place to make it a reality. However, we have to stay grounded here and impartially separate today's cash from tomorrow's dreams. Consider this quote from our source material. Starlink is an operating business. The larger AI and space opportunity is much more speculative and potentially much more expensive. Starlink and the Falcon 9 are generating real, tangible cash today. But this AI bet? That is going to require billions of dollars in fresh capital before it ever becomes a reality. It is absolutely crucial not to conflate an existing, profit-generating telecom business with a highly theoretical future data center in the sky. The latter carries immense execution risk and a capital burn rate that could test even the most patient investors out there. Section 5. Bull versus bear case. Weighing the risks. Okay, let's weigh the risks impartially here. The bull case bets heavily on that accelerating flywheel we talked about earlier. If launch frequencies keep increasing, costs keep dropping, and the company successfully evolves into a fully integrated space and communications platform, today's valuation might actually look like a massive bargain in hindsight. But on the flip side, the bear case provides a stark warning. Ambitious projects like Starship and in-space AI demand enormous, continuous capital. High valuations demand flawless execution. Any delayed projects or slowing growth in Starlink could mean the market severely punishes the stock. A great company doesn't automatically mean a great stock at any price, you know? There is a very real danger that the capital requirements outpace the revenue growth, leading to a serious financial squeeze. And finally, Section 6, the space economy verdict, sizing up the machine. When you step back and look at it, the sheer mind-bending scale of this operation really becomes clear. 100 missions planned in 2026. Over 10,900 Starlink satellites currently in orbit, 36 flights squeezed out of a single booster, and an economic engine producing roughly $7.8 billion in total revenue, with the majority coming from an internally built satellite network. They have unequivocally proven they can dominate space hardware, reach orbit reliably, and build one of the world's largest communications networks. These aren't just projections on a whiteboard anymore. These are tangible, operational metrics that have fundamentally rewritten the rules of aerospace engineering and telecommunication. But the ultimate question that leaves us pondering the future is this: breakout or resistance? The rocket manufacturer has officially become an infrastructure company, but can they generate profits large enough to actually justify that $150 valuation? Are we watching a historic breakout where one company completely dictates the economics of the new space economy? Or will those massive capital requirements act as an unbreakable ceiling? Wall Street is waiting to see just how big this machine can truly become. What do you think? Thanks for joining me for this explainer.